When it comes to Sharia-compliant equity funds, there are a few choices to choose from. How do you decide on which fund to choose? Well, today we're going to go through one equity fund, which is the Schroders Islamic Global Equity Fund. And hopefully, by looking at that one fund, it will help you expand your knowledge about the differences between the different equity funds out there, and it should help you choose a fund going forward. The reason why I chose this fund is because this fund is a little bit different. It's a little bit more interesting than most of the funds out there. I'm not saying it's better, it's just more interesting. It's got more nuances to it. So let's start by looking at this fund, and then we'll go from there and we'll discuss things along the way. So where do you find these funds anyway? How can you even find the list of Sharia compliant funds? Well, we actually have a list of all the Sharia compliant funds that can be generally found on our website. Now, we have made this based on what's available in the UK, but a lot of these funds are available overseas as well. And the fund that we're going to look at today is the Schroders Islamic Global Equity Fund, So on the website, you could just go to equity, and then on equity, you'll see it here, Schroders Islamic Global Equity Fund. Apparently it's up in the past year, just under 30%. It's super, super tiny. Let's zoom in. There we go. 30%. Here it is. Schroders Islamic Equity Fund. It's an equity fund. It's in sterling. Past month, it's up 6.4%. Overall, it's up around 30%. It has fees of 0.55%. It's an accumulation fund. It invests in stocks from around the world. Yes to this column, which is Purification. It's a fund, not an ETF. So we're going to be looking at that. It's actively managed, and the price of the fund, which is irrelevant, really. So what do all these things mean? Well, let's go through them one by one. Equities. It invests in equities. It invests in businesses. It invests in stocks from around the world. That's why it has the word international in it. It's not just focusing on one country. It goes around the world in the terms of what companies it invest into. Fees, 0.55%. That means when you invest into this fund, you are paying effectively 0.55% of your investment value in fees over the course of the year. That is not charged on a one-off basis. That is not charged as a check that you send to Schroders. That is slowly taken out of your investment amount over the course of the year. 1 over 365 times 0.55 times your investment amount over the entire year. That fee is taken slowly. You hardly even notice it, but it is there. And if you were to invest in it for a long period of time and try and work out how much you would have made without those fees, it probably would have been quite a lot more. This section, fund or ETF, fund just means it's a traditional fund, an open-ended investment company, which differs from an ETF in that an ETF can trade multiple times a day throughout the day when the markets are open, whereas funds trade once a day. So you put an order in at, let's say, 3 p.m. Your order actually executes the next day at a set time, maybe 11 a.m., where all the buys and sells cross at one exact point in time. Active versus passive. Now that you see on the majority of these funds on this page are actually passive, the Sharia-compliant active funds are much more rare, which is actually one of the reasons I chose this fund. An active fund is one where the fund manager aims to beat the underlying index, and a passive fund is where the fund just aims to emulate or copy the index as close as possible. Let's go into those few things then. The fact that it's accumulation, the fact that it does purification, and the fact that it's active. So let's pull up the Schroder website. So this is where we have the Schroders Islamic Global Equity Fund. Z just stands for the class of share that this fund is. It doesn't really matter unless you are a large fund manager and you're looking at different funds to invest into, because there might be slightly different fees. But in reality, for us general retail investors, we're only going to have one version of the fund to invest into anyway. Generally, the different versions of the funds will have different fees on them. The version of the fund that's available for general investors is 0.55%. So when we read the fund's aims and objectives, it says the fund aims to provide capital growth, and this is a key word now, in excess of the Dow Jones Islamic Market World Index. The majority of, when you look at a passive fund, they will say that this fund aims to match the performance of the index. And how do they do that? Just by copying exactly what's in the index. You don't really need a big brain fund manager to do passive investments. However, you do when it comes to active investments, because the fund manager has to look at what's in the index And then he has to decide how to change that index to improve your performance going forward. So they're going to sell companies which they think are not going to do well in the future, and they're going to buy more of companies which they think are going to do well in the future. And you can see here, apparently this fund is managed by someone called Philip Kawa. Doesn't sound like a Muslim name, but doesn't necessarily have to be Muslim. Maybe he's a revert. Here we see the charges, 0.55%. Here it has the risk and reward indicator, putting it at 5 out of 7. It's 100% equities, so we're not really going to get into the whole risk and reward question right now. We're more looking at details of the equity fund. The majority of equity funds, if they're holding 100% equities, as this fund is, are going to be on the top end of this scale. What I want to start by looking at is the performance of this fund year by year. And they have it in this table, and I am going to move my head out of the way, so don't you worry. In this table, they show you year by year what this fund has returned and what the target has returned. So before I zoom in to show you, remember the target is the Dow Jones World Islamic Index. I lost it now. Yeah, here it is. The Dow Jones Islamic Market World Index. And remember, this fund is trying to do better than that. And if it's not doing better than that, then it's not doing a great job. Whereas if a fund was a passive fund, what you'd look for is performance exactly in line with the index. So let's pull it up now. Here we go. So what Schroders returned is the top line. What the index returned is the middle line. And what this bottom line is, I believe, because it says comparator, I think the comparator is when it looks against the Investment Association Global Sector Average Return. So I guess other funds that are doing something similar to them, maybe they're active as well, I'm not really sure. So firstly, in the first year, the Schroders fund returned negative 2.2%. A lot of people will be like, oh, why did the fund lose money that year? But the index returned minus 7.3%. So Schroders did a great job. They outperformed by like 5%. Great job. Next year, it underperformed, up 10% roughly versus up 12% for the index. Year after that, they underperformed again. The Schroder fund was up around 17% versus 20.4%. And then in the last year, we have the fund slightly outperforming by 0.6%, 14% for the index and 14.6% for the Schroder actively managed global market fund. We can see the cumulative performance, which just shows you the performance if you add on everything throughout its history. And it shows you over the course of its inception, since inception, which seems to be just over 3 years ago, the Schroder fund has returned 67%, whereas the target, the index, has returned 60.7%. So it's done well. But over a 3-year period, the index is up 53.5% and Schroder's only up 46.9%. Remember, you're paying slightly higher fees than average to get into this fund because this fund is actively managed. So they're paying the fund manager, in this case, money to try and outperform the index. So if you've invested into it for 3 years and you're seeing that the index is up 53.5%, but you're only up 47%, then you probably should not be very happy with that. Because I know I wouldn't be. And here they have it on a chart and they show you it year by year. I think before what we were looking at September to September, whereas here in this chart they're showing you January to January or January to December. And they're showing Schroders is the blue line and the index is the pink line. So here outperformed, here they underperformed, here they underperformed, here they outperformed because they lost less. Here they outperformed by a decent chunk. And I think that's what's carrying them on the overall numbers. Remember, when we go back to the overall numbers, we're seeing Schroders has outperformed overall as opposed to just on a 3-year basis. Because if we look on a 3-year basis, we're looking at these just 1, 2, 3 years. Okay, they outperformed on one of the years, but they underperformed on 2 of them. Whereas if you look for a longer time horizon than 3 years, you include this big outperformance here in 2021, where they outperformed by around 5%. That's where they're getting that bigger outperformance for over the long run. But yes, over the past 2 years, seemingly, it's had underperformance. Now, they also have a chart showing this, showing the Schroder fund, which is the blue line, and the index, which is the purple line, showing it over time. They're showing that they're slightly beating it. But of course, that's only true if you started investing from the very beginning. If you started investing from when they very first started, seemingly in January 21, you'd see that you would be better than the index. But it doesn't mean that if you invested at any other point in time that you would be still beating the index. One thing to think about when it comes to actively managed funds is just how different is the fund to the underlying index. Have they got rid of most of the stocks? Are they only put in a few of the stocks? Because some actively managed funds, they might be in the index, it might be 500 stocks. They might just include 400 of them, or some of them. Some actively managed funds might say, no, out of the whole 500, we only want to include 10 of the different stocks. So some actively managed funds are super different from the underlying index, whereas others are actually quite similar. This is one of the funds which is actually quite similar, and you can kind of guess that by looking at the chart of the two over time. They're very, very close to each other. There's only a slight outperformance or slight underperformance. So it's almost like, is it worth paying those fees just to get a possible small outperformance? If you are getting outperformance year after year, it is going to be worth it to pay those fees. But as we saw previously, it's not reliable. They're not always getting those outperformance. Now, if we scroll down to this section, we can see how they differ in their allocation versus the actual underlying index. So the fund is a Schroder fund. The target is what the underlying index is. And we can see the difference in this column here, which is behind my head. So let's start. In the IT sector, which is probably one of the biggest, let me zoom out a bit. There we go. They've allocated 1.55% more. So that's probably been a good thing for them because generally tech companies have outperformed. Now the risk here is that you already have a big allocation to the IT sector, to the tech sector, and they're putting even more into the tech sector. It's great when the tech sector does well, but when it doesn't do well, the Schroder fund will be impacted more. Another sector that which they've over allocated to quite significantly, seemingly, is materials, whereas the target fund has 4.77%, the Schroder fund has 7.25%, and they've cut back on all the other different areas. Let me just move my head over so you can see when they've cut back on all different areas, and it's just a few areas which they've over allocated on. Now, if we pull up the fund literature, we can see a bit more detail about where they're actually allocating that money and how it differs from the indice. So we already looked at the sector differences, but here they are again, showing you what the Schroder fund is and what the target is. What I want to look at now is the geographical breakdown differences, and you can see what Schroders has allocated to versus what the underlying benchmark has allocated to. Key thing here is look how similar it is. They haven't made big changes. They're slightly over allocated in Japan, slightly under allocated in United States. The rest is quite similar. It's quite similar. I wonder how many active decisions the fund manager is actually making. So there we were generally looking at the active versus passive part of this Islamic equity fund. And just to touch on a few of the other points, purification. Purification is about how much money the company receives from impermissible income, the companies that the fund is invested into, and how that money, which is impermissible for Muslims to receive, is dealt with. Some funds, they pay it out to you. It's your responsibility to pay that money to charity. Other funds, they do the purification for you. They remove the impermissible income. They give it to charity. I don't think I saw which charity Schroder gives the money to, but they do it, apparently. So that's not something you have to worry about. Accumulation just means that any dividends that are paid out within the fund are reinvested into the fund. So your money can grow more over time. It doesn't really matter if a fund is accumulation or distribution. Another word for distribution is income. So it doesn't matter if it's either. Even if you receive dividends, you can technically, in theory, just as soon as you get them, reinvest them within the fund. But if you're trying to invest for long-term growth, generally accumulation funds is something that you would put more weight on. You'd want that kind of fund even more. Now, the cheapest Shariah-compliant funds are around 0.3% in fees per year. This fund is 0.55% in fees per year, so it's almost double the cost. I don't even know if you would say it's better performance. It's marginally better over the long term, but on a year-to-year basis, it's quite similar. So other than those things, what are you really looking at? The fact that it's an international fund is key. It does have around 70% of its investments in the US, but that's the case with the majority of international funds these days, they all have a relatively large allocation to the US, and you're basically deciding on the fact that it's an actively managed fund versus a passively managed fund. Is it going to do better or worse? In reality, nobody really knows. Nobody knows which fund is going to do best in the future, which region is going to do best in the future. But the nice thing with a global fund is that you're not too concerned with how one individual country does. You're more concerned with how the globe does as a whole, even though this fund is 70% US, but those large US companies, they are going to be global companies. They're not just going to be US-centric companies. The performance of how China is doing is going to affect Apple and Nvidia because they're all just so big. They're global companies. So they're key things to keep in mind. So yeah, when you look through the equity funds, look what regions they're invested into, see if the purification is done or not, look if they're accumulation or distribution, see if they're actively managed or passively managed, look at the fees that the funds are charging. And that's a good way to start to decide which kind of fund you should be investing into. One more final thing is that not every fund is available on every platform. Funds that are not ETFs are generally not going to be available on Trading 212. This fund is not an ETF. It's not available on Trading 212, but it will be available on other platforms like AJ Bell and Hargreaves Lansdown. Hopefully that's been a good overview. That's the Schroders Islamic Fund. Thank you so much for watching. Assalamu alaikum.